merit scholarship. He is a chartered accountant, all India rank 36, and he's also a CFA charter holder. So he manages this PMS where they invest in global opportunities through Gift City route. So we want to understand more about it, which is why he is here. Welcome to the session, Mihir.
Thank you so much, Sandeep, for having me here. It is indeed a pleasure to be interacting with you. Uh, yeah, and I mean, very excited to share some of our thoughts on the Gift City piece, global investing, and some of the considerations which investor can definitely look at. So yes, let's begin the session.
Great. There's been a lot of buzz around this Gift City across various forums. Can you tell us what is this buzz about, and what's your perspective about investing through Gift City, and what has been your experience working out of Gift City?
Sure. So, as you rightly pointed out, so we are domiciled in Gift City. In fact, we were one of the first firms to set up our shop in Gift City. We set up our office here in 2017, but it is only since 2021 and 2022 that Gift City has indeed seen a lot of traction on the investments front. As a simple concept, Gift City is an offshore jurisdiction. So what this means is that while Gift City is territorially located within India, it's situated in Gujarat. But for all exchange control purposes, Gift City is considered to be a region which is outside of India. And this really places it in a very strategic kind of a consideration where a lot of investment fund houses such as ourselves can set up offshore products. And these are products which enable both investing into gifts, as in investing in Gift City to invest into India, and at the same time setting up products which enable resident Indian investors as well as non-resident Indian investors to invest into the global markets. So it is, quite literally, it is envisaged as India's gateway to the global markets, where both
Great.
inbound as well as outbound investments can be facilitated. The infrastructure is coming up very well. I mean, because I keep work out of Gift City. Okay, we have a proper setup there, and since the last 18 months that I've been around, I have only seen the Gift City infrastructure really scale up. Okay, the entire cityscape changes every month because I keep on shifting there, and
Mm.
it is really envisaged as a very high tech, very smart city.
Oh,
Uh,
that's really nice to
that
know.
that's very nice. Indeed, and when you actually
Mm.
whenever you have an opportunity to be there, you
Okay.
will indeed realize exactly what we are really talking about. We've got the right set
Mm.
of ecosystems, the right set of regulatory frameworks to
Great.
facilitate both kinds of investing, and particularly outbound, which we will be covering. So,
Mm.
maybe one question from my side, if you can,
Yes.
because, I understand that you have a very good fan following on Twitter, and you are really very revered in the investment community. So what is, what has been your experience, or how is it that your followers look at global investing? What are their thoughts around investing in the global markets? Because that is primarily that we cover over here. But do you have, let's say, any investors who come to you with queries around global markets, or
Yes.
what is their perspective?
So there are multiple ways through people look at global investing. There are clients or investors who want to save for their children's education. A lot of people in Indians actually send the kids abroad for education, and they want to save and invest for their kids' education. They say they'll rather invest in dollar assets like maybe gold or something like global funds or something, so that the currency depreciation doesn't eat into the return. So they want to save into
Correct.
dollars. So that is one set of clients that we get. Then there are clients who have or investors who have a dollar abroad. They worked sometime in the past. They worked abroad and they have money abroad which they want to bring back. They will like say come back to India, but they still have money there, so they want to invest some money of that. Or their family is somewhat in the family is abroad and they want to bring the money in India. So that is another option. And third set of
Right.
clients are those like that, which one of the biggest one is where a lot of techies, no, they have ESOPs of
Yes.
US listed companies. A lot of these FANG companies or ANSYS and VMware, those kind of companies. A lot of them are there, and the bulk of the net worth has now gone into this stock. So they want to diversify their
Correct.
net worth, and so that they also look for some opportunities. And third last set which I try to persuade my clients is that there are a lot of structural stories which are not there in India,
Correct.
particularly on the technology front. So like artificial intelligence, you cannot play through India, robotics or genome
Absolutely. Yeah.
technology,
Yeah.
electric vehicles, so on and so forth. So those kind of opportunities probably are available across the world. There are some contra opportunities also. I don't know what you play. You'll probably guide us, tell us key what exactly you
Yeah.
do
Yeah.
in
Absolutely.
PMS.
Yes.
So that's where we come from. Like that's where my
Perfect.
clients come from,
Perfect.
and that's why I think those people would be interested in this session.
Right. 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 No. No. I must say that you really have a very, very well-informed, set of followers. So, really happy. So yeah.
Mihir, just to interrupt, your voice is pretty low. Can you bring the mic closer?
Sure. Sure. Is it okay now?
Yeah, maybe your
Yeah.
mic, can you bring it a little ahead?
Right. Right. Just 1 second. Let me just take this.
Sorry for this interruption, and yes, you may continue.
No problem.
Thanks.
Yeah. Yeah. Is it okay now, Mohit?
Yeah, it is good,
Yes.
I think.
This is perfect.
Yeah, it is good, I think.
Great. 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 Thank you. Thank you so much. Yeah. So yes.
Yes.
I mean, yeah. Let's continue.
Yeah, Sumir, my first question is that now everybody is smitten with this India story, Indian growth, Indian economy is doing so
Right.
well, and it is expected to do well. So why should the investors look at global investing options?
Absolutely. I think that is the first question which would be in everyone's minds, because at a time when Nifty has really reached an all-time high, and the India growth story is indeed very, very strong. As a global fund manager, I really cannot shy away from the fact that India is indeed poised to be one of the best performing economies in this decade. We have a lot of projections from the World Bank which consistently reiterate the fact that the growth rate in India is expected to be much faster than that of the US and the China as well. And with this kind of a thought process, definitely there is a case for investing into the Indian markets. As a fund house, as Phillip Ventures IFSC, we are very, very bullish on the India growth story. But to answer your question in, let's say a different way, let's look at a story over the last 15 years.
Mm-hmm.
So why consider global allocations in this scenario? Now, what I have in front of you is the comparative performance of some of the largest equity benchmarks. And I
Uh-huh.
have purposely taken a period of the last 15 years. So the very simple reason being that March 2008 was a lovely time for, I think, the financial markets with the entire global crisis unfolding. And I think wealth advisors such as yourself and fund managers, of course, back then I was a student, but fund managers would have definitely said that, okay, one should really invest in the long term. And as we can see that, this is how the story has really unfolded over the past 15 years. This is data till
Mm-hmm.
March 2023. What we really find is that Nifty is indeed one of the best performing benchmarks. Okay,
Right.
undeniably. If you really compare it with something like a China or a Hang Seng, they actually have been value destroying because I have
This data
started.
is in dollar denomination or
So
local
no,
currency?
so I am coming to that point. So currently this data is in the respective local currencies.
Local
We've
currency.
really
Okay.
not even factored in the currency
Right.
bit of it. So we
Correct.
can see, something like a Nasdaq, which has outperformed, all the other benchmarks. And when we are
Right.
talking about a period like March 2023, it typically
Mm-hmm.
means that after correcting 33% in year
Right.
2022,
Right. Right.
so like even after losing one third of its value,
Mm-hmm.
still over a longer period of time, the Nasdaq has given better returns. Now, one might wonder that a comparison between Nifty 50 and Nasdaq may not be an appropriate one. A better comparison could be the Nifty 50 and the S&P 500. Okay, it has the same data,
Mm-hmm.
but I've just really narrowed it down to these two benchmarks, two brothers, if I could call it
Mm-hmm.
that. We can see that the Nifty 50 has definitely done better than the S&P 500 over the past 15 years. Then the
Mm-hmm.
question is, why are we having this discussion in the first place? Because we can very
Mm-hmm.
clearly see that Nifty is a better performing index. So this is where I introduce your point, and that is the the entire point of dollar. Now these are benchmarks in their respective currencies. A lot of investors, or whenever they are comparing markets, they may simply look at the index to index benchmarks, and they may look at something like this and then conclude that okay, the Nifty 50 is a better index, undeniably. But the question that we really need to ask is that if as an Indian investor you would have invested in a portfolio of the S&P 500, what would have really happened? So here, if you as an Indian investor would have invested in a dollar denominated portfolio of S&P 500, two things would have happened. One is, of course, you would have made this entire return on the S&P 500, which you can see on your screen.
Correct.
But more importantly, the dollar itself has doubled during this period, which means when you are reconverting your portfolio back into your Indian currency, the combined effect of the underlying returns of the S&P 500 as well as a dollar depreciation. In fact, the very precise point that you mentioned at the start of the presentation, the combined effect would look something like this. A true comparison, what we should really be looking at is a rupee return of the Nifty 50 versus the rupee return of an S&P 500 portfolio. And what we really need to compare is the white line and the green line. So what we really find is, what we really understand here is that the impact of currency depreciation quite literally doubles, or at least in the last 15 years, it has doubled the underlying return of the S&P 500.
Wow.
And that is a differential which one really needs to consider.
Correct.
These are returns before taxation. Of course, Nifty will have a lower taxation, but even after the taxation bit, if you see, on a post-tax return basis also, you would have actually been sitting on a higher wealth if you would have sold your portfolio as early as March 2023. Just to put some more things in perspective. So that is the first or rather the two reasons. One is, of course, let's say you have the currency depreciation, which is a very important key. Of course, we do realize that the currency itself is an asset class of its own. It will have its own cycles of ups and downs.
Correct.
But over a longer period of time, what we really see is that the structural trend is leaning towards a depreciation, and that is something which we believe investors can play over a longer period of time. The second reason, which I present to you, is the data that you see in front of you. Now, again, I am removing the currency, out of the picture. I am just looking at the respective, benchmarks and the respective returns in their local currencies. What we really find is that, an index like a NASDAQ has actually given very strong returns since the second half of the previous decade. We can really see that, almost excepting for the year, let's say 2018 and 2022, NASDAQ really has a very strong run of double-digit returns. And again, over a CAGR basis, we can see for this period that we've chosen, almost 13 years, 14 years now, the American benchmarks have really done well, in their respective currencies also. What we also understand from this is that a faster growing economy need not necessarily mean a better performing stock market. And this is a very critical point, which I believe, which we need to communicate. Because what really happens is that in the previous decade also, the Indian economy definitely grew faster than the American economy. But numbers do speak for themselves, and you have them right in front of you.
Correct.
So that is the second reason that you have other regions, and there are cycles in which Nifty has been the best performing benchmark. There are other cycles, or there are other years in which Nifty has been one of the bottom performing benchmarks. So there are pockets of opportunities that come, that arise in other parts of the world as well.
Correct.
And, that is the reason why one should look at a global portfolio. Should we really say that, okay, don't invest into India and invest globally? The answer is no. As a fund house, it is never a difference, or it is never a choice between India or the US markets, or between India or the global markets. It has always been about India and the global markets. Investors may have a very strong equity portfolio, a very strong portfolio focused on the Indian markets. as a next
Mm.
step, okay, as a way to enhance their portfolio management further, you can now start looking at global allocations.
Right. So that
But
is
of
what we've been
course,
advocating our clients also. Add
yes,
global diversification. There are a lot of, I think, themes now, right, where
right.
the growth rates are like absolutely phenomenal. So those are there in the global markets, like banks, what they've done in the past so many years. So it's unbelievable.
Absolutely. Absolutely. Yes.
On that note, can you give us an idea as to what is happening? What's your perspective of what is happening in the global markets, and what are the trends that you're observing in the global markets?
Sure. Yes. I think, the next very logical question should be this only, that now that so much has already happened, and now that, we have the right set of data points also to understand what has really unfolded, what could be, in the markets ahead of us. I'll just share a few trends that we are observing. Because these are obviously the past data and past returns. And as investment advisors, we would always say that, past returns are not a guarantee for future performance. So
Hmm.
what is it that really lies ahead? So
Correct.
now we are sitting in 2023. Now, let's say I have the opportunity to do this exact same webinar with you maybe in 2033, 10 years from now. I really hope that happens.
Hmm. Right.
Over the next 10 years, if we would be really discussing what has unfolded in the last 10 years, so, some of these trends would have happened. First is what we call as a grand reset.
Hmm.
The entire COVID-19 pandemic has been so disruptive, in the way businesses really functioned. You had the entire hybrid model of working, work from home. You had supply chain disruptions. You had businesses reconsidering their business models. And a lot of companies, it is said that they actually advanced their digital disruption plans. A lot of companies had plans of going digital, maybe let's say in 25, 26, 27, but because of the pandemic, they were really forced to, do that and prepone those plans. One likely outcome is that a lot of large organizations have saved on their overhead costs. Okay, that is, the entire grand reset. That's number one. Second is a trend which has been continuing from the previous decade only, which is also reflecting, we believe, in the returns of the Nasdaq. That since the second half of the previous decade, if you look at the returns of Nasdaq, what we really find is that the markets have rewarded those companies, those countries, and those businesses which were actually at the forefront of technology and disruptions.
Right.
And we expect that this trend will continue going into the future because, the entire concept of Industry 4.0.
Correct.
You mentioned artificial intelligence. There is
Right.
semiconductors. There is robotics. There is medical technology. There is Internet of Things. So these are
Right.
trends which are really driving businesses, across the
Rhythm
globe.
Rhythm Desai of Morgan Stanley had mentioned that this is expected to be the most innovative decade since
Right.
1970s, I think, something when railways and
Absolutely.
something was
Absolutely.
discovered.
Yes. No, I completely second that because, those are the kind of disruptions that we are seeing. And what is really happening is that these are, themes which are emerging.
Right.
At the same time, in fact, the point which I was just about to make is that today technology is not just a standalone sector. I mean, as an Indian market, we may look at investing into Nifty IT or the Nifty Technology Index. But in the global markets, while there is a group of companies classified as technology, what we really find is that technology is deeply embedded across different businesses.
Mhm.
Technology in financial services, be it in the form of a blockchain or decentralized finance, distributed ledgers for that matter, or there is
Right.
medical technology, there is genomic revolution. So, the entire concept of technology is getting rethought. What is
Correct.
also happening is that, with so many trends coming in, a lot of investable ideas are also getting generated. And today,
Mhm.
especially the global markets, because what we strongly believe, at our desk when we analyze that, the entire industry 4.0 considerations, particularly something like an artificial intelligence. Wide scale adoption of artificial intelligence is happening by organizations which have very strong balance sheets. And there
Mhm.
is a higher probability of companies in the western part of the world because they have huge balance sheets. Their business models are much more evolved. They have strong cash on their balance sheet. So they are in a better position to become early adopters of technology and then derive the benefits. Will India catch up? The answer is yes, definitely. In fact, a few days back when I had recorded a podcast with Mr. Anupam Gupta on Paisa Vaisa, I had gone on record and said this, that I very strongly believe that India houses some of the brightest scientific minds in the world today, okay, undeniably. But when it comes to the infrastructure, we are catching up. Perhaps the next decade could be ours, in terms of the technology revolution. So, and that is also one of the reasons which, in fact, even you mentioned that, with so much of the Western companies or the global giants becoming early adopters of technologies, that itself is opening up like avenues to investments, because these are listed companies after all. So
Right.
these are avenues to invest in some of these emerging technologies, which number one, we
Mm.
believe will drive the next leg of global growth. But
Correct.
at the same time, we also believe that these are investment ideas which may or may not be available for investments if you are looking at only the listed Indian equity space.
Correct.
And that is a trend which we see. So of course, will the Indian markets continue to perform? The answer is yes. But whether they will outperform the other markets or not is a question which we will be able to answer only in 2030.
Mhm,
Uh,
that,
you know, because yes, there are. I think we are in a very very structural kind of a growth in India as well. But global markets are giving you opportunities,
right.
outside of those available in your domestic domain.
Correct. Correct.
So that is something that you can consider.
Great. Great. So can you give us an idea how you want to capture these opportunities and what products are you offering for our
Correct,
clients and
correct,
our Twitter audience?
correct, correct. So, we manage the global desk at Phillip Ventures IFSC, and there are three product lines that we are currently running.
Okay.
One is the global PMS. Next is the global advisory,
Mm-hmm.
and third is the global markets access. So our global PMS is our flagship strategy. It is a PMS where we are investing investors' money into markets outside of India. Global advisory are products designed for smaller ticket sizes. So global PMS is for, let's say, the evolved investor, and global advisory is for investors who want an entry into the global markets, but are really confused as to what could be the better way to go about it. So
Mm-hmm.
that is where we are. We have the global advisory. The
Okay.
third service is the global trading, which we have enabled in Gift City. So today now investors can open their own trading accounts with us, and we will enable them to, through our global platform, we will enable them to transact into US stocks and stocks and ETFs today.
Okay. Great.
So we have all these options available. We have a proper discretionary managed portfolio service, which is the global PMS. We have an
Mm-hmm.
advisory service where we are advising on global markets and the global securities. And then
Right.
for US listed stocks and ETFs, investors are looking. I mean, investors can do it on their own, because
Okay.
I just made this point that your investors are indeed very very evolved if they are really thinking on these lines. So
Right.
for the well informed investors, they can start their own investment journey on their own accord. For
Right.
the global PMS and advisory, we have curated strategies where we are investing in exchange traded funds or US listed ETFs.
Mm-hmm.
Because that universe itself is very big. So that is this is the entire suite of our product strategies in a nutshell.
So why are you investing in ETFs when you can invest in stocks?
Yes, yes, absolutely. I think very very rightly put by you. Again, multiple considerations for looking at US listed ETFs over direct stocks. First is when we look at the market for Indian ETFs, or for any, let's say, Indian investor, when we say the word ETF, the first thing that would come to our mind is, okay, a Sensex ETF, a Nifty ETF, or maybe a Bank Nifty ETF. The typical thought process could be that these are exposures, or these are listed mutual funds giving us access to a broader market, let's say a Nifty 50 or a Sensex. And yes, one might really have this logical question, that why would you really come to a fund manager who's in turn investing only in a broader kind of a market? So here, we introduce the entire idea of the universe of US listed ETFs. Now, when we, let's say move outside of India as far as the investment universe goes and look at the market for US listed ETFs, what we find is that the products available are available not only at a broader market level or a sector level, which they are available in India as well, but they are also available at a level of specific businesses and specific investment themes. And what I mean by this is, let's take an example. Now, today, when we look at a sector like a healthcare in the US, now within healthcare, there are segments like pharmaceuticals, biotechnology, medical devices, genomic revolution, and digital wellness. Now, these are just 5 segments within the healthcare industry, and you have ETFs giving you exposure to each of
Each
these
of these,
individual
right?
businesses separately.
Correct.
Today, we know for a fact that in healthcare, a generic trend in healthcare need not necessarily affect each of these businesses in the exact same fashion. Something like a genomic revolution or biotechnology is more a heavily regulated industry. Medical devices, is more perhaps affected by the chip shortage or the semiconductors kind of a consideration. So, that is, I mean, this is how we have different businesses which are investable using different ETFs. Now, I just mentioned 5 businesses within healthcare, but overall at our desk, we are monitoring more than 65 different businesses spread out across 11 sectors. And we are individually monitoring these businesses, the trends in those businesses, some developments happening, the major players there, so that is something that we monitor. And these list of 65 businesses, 65 plus businesses are actually something that we have curated in-house. It is not a list which you'll really find on the public domain. We have individually studied the sector focused ETFs and then, curated this list. So that's number one. Second is that the market for US listed ETF alone gives us access to more than 50 different regions across the globe. At our end only, we are monitoring more than 35 different countries as potential investment destinations. So today, if I want to invest in a Taiwan or a UK or a Japan or an Australia, if we really have opportunities there, we really don't have to go to these respective markets and then let's say find brokers there and then comply with the local regulations. We can simply buy a dollar denominated US listed country focused ETF. So by actually compiling a portfolio comprised of ETFs, what we are really doing is we are making a selection of some of the best performing businesses and some of the best performing regions, which we believe will grow over the medium to long term.
Right. Okay. Okay, tell me something. With there's so much awareness, investors can directly buy and sell ETF, right? From their own. There are so many global platforms through which they can do that. So at what point should they consider investing in your products?
Correct. Again, very, very rightly and very, very uncomfortable questions, but still very happy to address them. So yes, today you look at any global platform. If you come to the Phillip Ventures IFSC Global Markets Access platform, which we are offering in Gift City, all the ETFs that I'm talking about, these are investable. Investors can simply buy and sell ETFs on their own. Question is, why do you still need a fund manager if that is the question? So again, our reasoning goes as follows. If you look at the market for global ETFs, it is a market which is now close to $12 trillion with more than 10,000 different ETF products listed across more than 45 plus exchanges. So, that is the entire spread of ETFs across the globe. If I have to narrow this down to only the US listed ETFs, then you have around 3,500 to 4,000 different ETFs. Available only in the US, US listed, available on our platform as well, if I may add. But now let me share with you a very, very fun statistic. In the years 2020, 2021, and 2022, in each of these 3 calendar years in the US, there were more than 400 new ETF launches every single year, which means total 1,200 ETFs added just in the last 3 years. That's number one. So let's think about it this way, that in a year we have roughly 250 to 260 different trading sessions. and you have 400 new ETFs every year, which means on an average, an investor will have more than one new ETF every single day. I mean, that is what it has happened in the last 3 years. So just imagine the kind of universe which is available to the investors.
Paradox of choice, you can say.
Lots of choice, and or should I say, investors are either they are very very spoiled for choice. They will
Paradox of choice,
divide
like
their
when you have
feet
too much
everywhere.
choice, you can't decide.
Paradox of choice, yes, a paradox of choice. We could call it analysis paralysis also, because either investors will be so confused because so many themes are available. Suddenly there are Bitcoin ETFs, there are carbon credit ETFs, you have ETFs on a lot of ESG considerations. Surprisingly, you had even video gaming ETFs, which actually did very well for a brief period of time, and people were very, very sold on them because the work from home thing really revived that industry to some extent. So either the investors will dip their feet everywhere only to realize that the allocation is not very, very proper, or they are so confused, as you said, the paradox of choice, that they will not invest at all. They will, quite literally refrain from investing and perhaps miss out on some of these opportunities. So that is
Okay.
where, our expertise, our services come into the picture. The entire journey of more than 4,000 plus ETFs to the final 20 ETFs is a result of very, very rigorous and comprehensive risk management processes where we have both quantitative filters as well as qualitative assessments. And that is how we are, curating these portfolios, or advising our clients as well. That is our service in a nutshell, actually.
Can you give us an idea as to what is your investment philosophy, and what's the research process that you follow in shortlisting, selecting these process on position sizing and all of that? What is the process that you follow? Can you give us an idea?
Absolutely. In fact, our investment philosophy, the entire thought process rests on the four pillars, as we call them. The first pillar is the fundamental research bit of it. Phillip Capital, as a global brand, as a global group, places utmost importance of fundamental research. In fact, if you or any of your investors, or let's say any of your followers, had an opportunity to ever look at the institutional research reports released by the India office, you would acknowledge the fact that our reports are considered to be some of the best pieces of investment literature on the street today.
Right.
And the testimony to the fact is that our analysts are rated anywhere between number 3 to number 1 in their respective fields.
Wow.
So fundamental research is very, very critical to us. It is a responsibility that we at the Global Investments Office have really shouldered at our end in Gift City. And that is something which really propels us to analyze a lot of these global businesses, regions, and asset classes in greater detail. The next pillar of our research is a quant-based approach. Now, especially in a product like ours, because we are investing in ETFs, the positions that we really take are generally macro in nature. It is more a top-down product than a bottom-up product. And for this reason, analyzing data is extremely critical for us. So over the past so many months, the alternative investments division has built a host of in-house data-driven capabilities. We are doing the coding and programming bit in-house. We are analyzing huge data sets. We are monitoring, all these different businesses and countries that we spoke about. There are economic indicators. There are business-specific data points that we really monitor. And of course, a whole range of historical returns and statistical computations. In fact, I was just estimating that very recently, the kind of computational speeds with which we function, we are generating close to 12,000 data points every single day at our desk. And we are really, it really enables us to monitor a lot of these investment ideas in greater detail. Of course, this entire discussion around data and analysis and data-driven capabilities also comes with a disclaimer that we are very, very clear on our approach. The entire idea behind the quant-based approach is only to enable us to strengthen our first pillar, which is fundamental research. We are not building black box models at our end. A machine will never tell us what to buy and what to sell. We are very, very clear on it. Every decision that we take is thoroughly discussed, debated, and deliberated in-house. That is something which now brings us to the third pillar, and that is a long-term focus. Now, throughout our investment, like the global PMS and advisory, we really invest in positions and advise in securities where we believe that long-term value creation can happen. Our investment horizon is anywhere between 5 to 7 years. And
Mm-hmm.
to that extent, we really don't believe in frequently churning the portfolios.
Okay.
We really believe in investing for the long term, investing in some very, very high conviction ideas,
Okay.
which we believe will deliver value over a longer period of time. And now
Mm-hmm.
comes our fourth pillar. The fourth pillar of our process is seamless implementation. I did mention to you that we started off in Gift City way back in 2017, and we've quite
Mm-hmm.
literally evolved with the evolution of the Gift
Correct.
City ecosystem.
Right, right, yeah.
And the result of this evolution is a set of processes which are very, very user friendly, very, very investor friendly, very, very seamless, be it documentation, be it, let's say setting up the global trading accounts, be it trading in the global markets and even the post-trade services. In fact, our division also publishes a lot of material, on the global markets. Every Monday morning, there is a market, so there is a global markets note, which a weekly note which our desk publishes, where we give our thoughts on, some of these trends in the global markets. As of
Mm-hmm.
every month end, we also publish a newsletter, where we
Mm-hmm.
analyze, specific areas of the global markets in greater detail. And these are areas which otherwise may not be discussed or otherwise may not be talked
Right.
about in the global markets. I mean,
Okay.
very recently with this entire US Federal Reserve monetary policy, or let's say conflict in the Middle East, our last newsletter was actually on the water resources industry. Water sustainability is something that we covered, and what are the investment opportunities there. Before that,
Mm-hmm.
we did a deep dive on rare earth metals. Before that,
Okay.
cybersecurity. So we really
Wow.
analyze these in greater detail.
Nice.
We really consider these efforts as part of our seamless implementation because it not only keeps our readers engaged and updated with the global markets, but they also give our readers, a sense of how the fund management team is really looking at particular investment ideas, and it really gives them the confidence about the kind of depth with
Mm-hmm.
which we really function as part of our work.
Right, right. Okay, okay, okay. So you mentioned about your global PMS. Can you elaborate what strategies you are currently running in that? And also, you
Correct.
can you give us idea about the other products also that you spoke about?
Right. So yes, the global PMS is our flagship strategy. The first strategy that we launched, which we are currently running, is the Phillip International Pioneer Portfolio. Uh,
Mm-hmm.
as at December end, we will be completing exactly 2 years.
Mm-hmm.
The entire name, Phillip International Pioneer Portfolio, is very, very special to us because we are the first operational global PMS in Gift City. To that
Mm-hmm.
extent, we have pioneered global investing through Gift City.
Nice.
That's number one. Second, as the name suggests, because the name is pioneer, it is very, very forward looking in its approach. The entire philosophy or the thought process behind this fund is to enable our investors to invest in the trends of today and the ideas of tomorrow. The
Mm-hmm.
entire endeavor is for our investors to capture growth stories across innovations and regional developments.
Great.
So this is a product which is investing into equity ETFs, and the entire focus is to generate capital appreciation by investing across different sectors, businesses, and regions, which we believe will grow over the medium to long term.
Mm-hmm.
What I can say about this product is that, while I've mentioned, the trends of tomorrow, or rather the ideas of tomorrow, or even, growth stories across innovations and regional developments, that does
Mm-hmm.
not necessarily mean that this is a technology heavy portfolio. We've really seen a
Mm-hmm.
lot of trends emerge in a lot of other sectors and other themes as well. We've been playing on areas like water sustainability, as I mentioned. We've benefited from having invested in nuclear energy this year. Home construction. There is semiconductors, which I think most of the global fund managers would have invested in.
Right,
So,
right, right.
these themes are spread out not only within technology, but even other businesses as well, other sectors as well. And
Right.
similarly, this is a product which is not US focused, because while we are looking at US listed ETFs, that doesn't mean that it is 100% invested into US. Currently, I would say that roughly 75% effectively is invested into the US markets and 25% into other regions.
Right.
Again, that is, how we look
It's,
at
I
it.
mean, you're not much of a contra investor as such. You look for structural stories.
So, yes, I mean, we would, yes, so we are definitely looking at structural stories. But if one particular story coincidentally makes us a contrarian investor, why
Okay.
not? In fact, I'll give you an example. We actually invested in a theme like home construction,
Mm-hmm.
knowing very well that in the US markets, the mortgage rates are rising, and the real estate
Mm-hmm.
developers will actually suffer because of that. But even then, our conviction on that particular theme was very strong. And if you look at the home construction returns in the last 1 year, the
Right.
home construction ETF, you will get your answer. It was actually one of
Mm-hmm.
the best performing themes,
Right.
something that worked in our favor.
Mm-hmm.
So yeah, I mean, yes. So we may become a contrarian investor, but that is, I would say that it is just an unintended consequence. We will
Okay.
not be chasing contrarian
Counter
ideas,
bets. Right.
but
I
yeah,
understand.
yes,
How is your fund management team? I know, okay, the India team is one of the biggest. Like, I have they've got
correct, correct.
33 analysts. What about the Gift City one?
Right, right, right. So I'll just share my screen maybe again. Uh, So, very briefly, I'll introduce our fund management team. So, the fund management function is headed by me. So, I am the fund manager as well as the principal officer for the Gift City business. Of course, I have more than 8 years of experience in the asset management business. My current focus is managing strategies, with a tilt towards businesses and global geographies. Uh, Along with, my role as a principal officer here, I also have another responsibility that I am a member of the Public Awareness Committee with the CFA Society India.
Wow.
As part of this role, I actually contributed to the Gift City newsletters. In fact, in the last four newsletters that were published for the CFA Society, I was fortunate enough that my articles got featured as the cover story. They continue to be featured there. You can have a look at
Wow.
the CFA Society India website as well.
Nice.
So that's pretty much about me. And I work very closely with an associate, Rishwik. His background is that he has studied abroad. He has done his MBA in France. And for a very
Mm-hmm.
brief period, he actually worked in the European market. So some of the global emerging themes, okay, more on the sustainability, climate change. So these are themes which he has really observed firsthand.
Mm-hmm.
Extremely, data driven, as data driven as I am. So, both of us really manage this function. Now, other than that,
Mm-hmm.
there are different other colleagues as well, which I'll speak about. So, the global teams of Phillip Capital. Now, today, a very strong focus on fundamentals as well as the quant-based capabilities that we have built in-house enable us to
Mm-hmm.
conduct more than 90% of the investment research in-house.
Mm-hmm.
And for the remaining 10%, so I am tapping into the entire pool of wealth advisors and senior fund managers across Phillip Capital offices. So I am in regular touch with the head of research in Singapore, Hong Kong,
Nice.
Malaysia, Turkey, even UK as
Right.
well.
Mm-hmm.
But that constitutes only 10% of our research. Why do we really do this? And what is the entire idea behind it? This is that we very firmly believe in the entire concept of ground view. Of course, Phillip
Mm-hmm.
Capital, the India office, does publish this compendium called as Ground View, which is for Indian stocks. But Ground View is actually a global concept for the group.
Mm-hmm.
Just to give you an example, today, if we really want some clarity on what is happening in Taiwan, for that matter, so our teams in Hong Kong are people on the ground. They will be my go-to people. And
Mm-hmm.
because we have a fundamental research as well as the capabilities that we spoke about, our
Right.
interaction, of course, more than we seeking answers, it is actually an exchange of ideas. We actually present
Mm-hmm.
our hypothesis to them that okay, these are the data points that we are looking at. These are the
Right.
macroeconomic indicators. This is how manufacturing is shaping up. Or there
Right.
is, let's say, a global supply chain pressure index which is moving in this direction, and this is where we think, let's say, the semiconductors business in Taiwan could be headed. Can
Mm-hmm.
you, what are your thoughts? So then they
Right.
review it, and then they can come back to us with some more details on the ground reality. So
Right.
this
Okay.
really facilitates a very healthy exchange of ideas. And even the understanding at our end is much more clear, because I mean, if at all we are let's say incorrect in our assessment, we have a much greater clarity, a clarity that really remains with us, for a longer period of time. So that is how the global teams and across the Phillip Capital offices are. Now, in addition to this, there is an investment committee which governs us. So every decision that we take is first discussed thoroughly. It is discussed, debated, deliberated thoroughly within ourselves, and then it is placed before the investment committee. Again, our investment committee, on an average, has more than 3 decades of experience. Very, very senior people in the industry are there. They thoroughly review our investment framework. They thoroughly review our investment decisions. In fact, the mandate which I have is that for every investment idea that I present to them, I should actually be presenting them more risk factors than the opportunities. So if I'm looking at, let's say, 5 opportunities, they will expect 10 risk factors, because they would like us to be absolutely clear on whether we are absolutely sure of where we are headed and what is it that can go wrong.
Okay.
If indeed things go wrong, are we really in a position to course correct, and are we is it really something that we had initially thought about and factored in as part of our investment decision? So that is the entire idea of having this investment committee. They are governing us. They are our hawks, as we call them. Very, very exhausting discussions happen with them, but I think the result is a very, very structured portfolio, which eventually gets constructed for our investors.
Right. Okay. Okay. One last question before we open the Q&A session. Participant, you can start typing your questions in the chat box. Mayor, can you just give us an idea about the account opening process? GIFT City is a foreign jurisdiction, so or does this LRS of RBI apply to the investors?
Sure, sure. So we'll, divide this into, let's say 2 parts. One is the account opening process, and then the fund transfer process. Account opening process is a very, very straightforward process. We've kept the KYC process very, very straightforward, the standard set of documents. The GIFT City regulations, which is regulated by the International Financial Services Centers Authority. So these regulations keep on prescribing certain norms, and that is something that we factored into it. But we have our standard account opening process, our standard portfolio management or advisory agreement, as the case may be, and the standard set of KYC forms and the standard supporting documents. What I actually want to also add to you is that today, in our global PMS, we also have a lot of non-resident Indians investing into our products. And that is the beauty of the entire situation, because a person sitting in, let's say, the Middle East or Africa will have his or her own avenues to invest into the global markets.
Correct.
Yet they came to GIFT City, yet they come to Phillip Capital, and it really speaks about 2 things. One is the kind of confidence which people have on Phillip Capital as a global asset manager, because globally we are managing more than $35 billion of assets under management. But it also speaks about the kind of credibility which GIFT City is enjoying in the minds of people. So, even for non-resident Indians, the account opening process is very, very seamless. And then, we open the segregated accounts of our investors with our global brokers, but that is, more of an internal process. And, that is how we, typically go about, the account opening process. So very, very straightforward process. In fact, for a non-resident, it is actually lesser paperwork as compared to what they could have entailed if they are looking at an Indian product. Because
Right. Okay.
Because investors are not required to open any bank account in GIFT City, so that really cuts down significant paperwork. So that's number one. Now coming to the next part, what happens, when investors are investing with us? So first, as I mentioned, that investors don't have to open a separate bank account. We have our collection account, which we are maintaining with ICICI Bank in GIFT City. The GIFT City regulations require us to have our collection account with a GIFT City domiciled bank. So, that is where we are. Investors directly remit their funds into our GIFT City account. So, for example, for a resident Indian, the process of the liberalized remittance scheme or LRS will apply.
Okay.
They will submit form A2 with their bank and then prescribe the purpose. So the bank will essentially guide them as to the entire process. So
Mm-hmm.
that is for resident Indians. For non-resident Indians and foreign nationals, the process is more seamless. Investors directly do a dollar-to-dollar remittance into our collection account. So that is how typically it happens. With LRS, investors need to also be cognizant of the fact that there is 20% TCS. So, that is something that they will have to factor in when making their
Right.
investments.
Okay, okay. And what about those who have ESOPs in global, like US listed companies? How do they transfer these funds? Can you give us
Correct.
an...
So we have, we have some clarity that if they have a holdings of foreign securities,
Mm-hmm.
so that there are processes, there is an elaborate process by which they can transfer their foreign securities to our, let's say, Phillip Capital trading account if they happen to become our investors here. So yeah, there are
Mm-hmm.
these processes. For ESOPs, of course, there is a different set of processes. Maybe we could take that offhand because there are
Okay,
some
okay.
nuances that
Sure.
need to be discussed. Yeah,
Sure. So we open the floor for question and answers. So you can type
definitely.
your queries in the chat box. There are a few questions already. So I want to. There are two people who want to understand about inheritance tax in US. You want to address that? Does it come under this? Uh,
So
yeah.
inheritance tax, from what we have, the clarity that we have from our consultants is that it is, typically a gray area because, different federal tax regimes and different states have their own norms for inheritance tax. Uh, the structure that we have at our
Mm-hmm.
end is that we are actually opening segregated accounts of our investors within the Phillip Capital or the Phillip Ventures IFSC umbrella. So what this typically means is that for our broker, which is Phillip Singapore, the trading entity is Phillip Ventures IFS, under which we have these different segregated accounts, and those accounts of course can be transferred whenever let's say an event happens. Inheritance tax. I mean, our understanding is that a proper legal professional would be the best person to address this query because
Mm-hmm.
again
Okay.
there are
Okay.
that because there is no clarity at that end as well because they say that inheritance taxes may apply. So what are the exact rates and everything, so a legal professional should be able to help.
Right, right. So there are people who are asking what is the minimum ticket size, what are the brokerage charges for
Right.
trading account, and they're
Correct,
asking about
correct.
past performance also. Can you?
Right. Okay, so minimum ticket size for the global PMS as per the gift city regulations is 1,50,000 US dollars. This is as per the gift city regulations. For the investment advisory, we have kept the ticket size for $25,000. So we advise on portfolios worth $25,000. The advisory portfolio can be executed using our own service, which is the Global Markets Access, which is also the third service, which is a DIY. For the global markets access, for the brokerage, we encourage you to get in touch with, let's say Kulkarni sir, and then we'll separately address those queries. For the global PMS,
Mm,
we are having a flat expense ratio structure. So we are not charging any performance fees. We are not charging any entry load or exit load in the portfolio. There is no upfront cost also that we are charging in the portfolio. We have a flat management fee. But typically 2% is what we charge. In a good year, like for example, in the year 2023, as of yesterday, I just computed returns. Our fund is up 21% for this year, 21% on a year-to-date basis. But even then, we are charging only 2%, no profit sharing really, really passing on all the benefits to our investors. In fact, we really mean it when we say that we want the entire experience for our investors to be very, very seamless. And, the end result is, let's say structures which are very, very investor friendly. I hope this answers your question.
yeah, it does. Yeah, somebody's asking, could the speaker comment on the tax implications on investing via gift platform versus in overseas mutual fund platform, overseas mutual funds?
Yeah. Okay. I mean, that's a very, very relevant question, especially with the announcements that happened in the last budget. So overseas mutual funds, if you are referring to the feeder funds which Indian fund houses are offering, so now the entire concept of long-term capital gains is gone, because the entire income will be taxed at your regular rate of taxation. They
Mm-hmm.
really introduced the entire concept of specified mutual funds. But as far as our investments go, or the global PMS for the advisory, because we are investing in ETFs, but these are ETFs which are directly domiciled outside of India. So to that
Mm-hmm.
extent, they don't qualify as a mutual fund under Section 1023D of the Income Tax Act 1961.
Okay.
These are directly foreign listed securities, and hence they will be treated as capital assets. So the normal
Mm-hmm.
taxation on capital assets will apply, wherein long term is getting taxed at 20%, and then short term will be taxed at your regular rate of taxation.
Okay. Okay. Somebody wants to know what are the brokerage for trading through trading account with Phillip Capital, and
Yes.
he wants to understand, do you share sample reports of filing taxes in India on capital gains? Who holds the share? Like in India, there is a DP account. So in the case of Gift City, who holds the shares?
Sure. So, okay. So first, for brokerage, because the brokerage business is not directly managed by me. So, I will not be able to comment on the brokerage shares. Can definitely comment on the PMS, which I just did. As far as the statements go, so because these are segregated accounts of the investors, which are maintained with our broker. So we receive statements from our broker, which are at an individual investor level. So all the contract notes, all the monthly ledger reports, all the annual dividend statements, everything we are receiving in the name of the individual investors.
Mm-hmm.
Separate of this, we are also publishing, the standard month-end reports from our own fund accounting system. So these are the things which we like share with our investors, and that enables them to have, no difficulty filing their income taxes here in India. So,
Okay.
that is something that we share. Yes.
Right. Right. Okay. I think these are
So
the
can I
questions.
take, no, there
Yeah.
are more questions on Q&A
Okay.
box. May I take it
Yes,
one on
yes.
one?
Yes.
Okay,
Actually, I can view those questions.
correct.
Okay.
So,
So the in the Q&A box, I think let's start with Mr. Bhupesh.
yeah.
Uh,
Yes. So,
yes.
okay. So, maybe
Isn't Hang Seng now close to bottom? Would situation
correct.
improve in China and Hang Seng?
Yes. So, I think I think here I would, revisit the entire question which Mr. Kulkarni asked, that am I a contrarian investor? Uh, I would never be, in fact, when it comes to China or Hong Kong. In fact, ever since we've started the fund, we've really gone on record and said that we are not very comfortable investing into China. In fact, when we started the fund, China had already corrected quite a bit, and China was available at very reasonable valuations way back in, let's say, December 2021 and January 2022. So even then, because we did not have really a confidence on the macroeconomic indicators of China, we refrained from investing into China. And if one really has to consider the way China and Hong Kong have really moved, there have been problems like a technology crackdown. There have been problems like the real estate bubble, the entire Evergrande crisis coming into the picture. All of a sudden, there were these fears of delisting as well in China. So, because of which there was a massive correction in Chinese equities. Last year, about this time, we did see a very big pullback in Chinese equities as well, Hong Kong as well. But again, this year has not been that great. Going forward, we are very cautious when it comes to China. Yes, if at all there are specific themes within China, like a China consumer discretionary, we could consider. But areas like China technology and other areas are something that we are looking at not investing at the moment. Would the situation improve in China and Hang Seng? So yes, there are discussions around stimulus packages being launched in China. China is right now currently in that entire the latest inflation did mention deflation. So again, that is a structural problem. Manufacturing PMIs have also shrunk, and to that extent, we are not very confident. It really remains to be seen what are the policies that will unfold in the months to come, and only then we should be able to make some assessment. Yeah, yes. Next question.
What is the difference between global AIF in Gift City and global PMS in Gift City? Any reasons why you have
Right.
not done global AIF?
Yes. So of course, now as we speak, we already have the license to offer AIFs. We are now registered as a fund management entity. We initially started off with global PMS. One of the reasons being that the regulatory framework itself was evolving, and we really found that there was a greater demand for PMS structure, and it was more seamless from an operational point of view, given the regulatory framework, to actually start with a PMS first. But now, because we are registered as a fund management entity, we are also now looking at some AIF strategies, both inbound as well as outbound. In fact, we very recently received an approval for inbound AIF, and you all should be hearing about it soon. So yes, definitely a global AIF is also on the cards, and in a few months' time we should be able to come out with something.
Okay.
Uh,
Appreciating. Yes.
just one point. I don't think I really addressed the first bit of it, that the difference between global AIF and global PMS. In an AIF, investors will own the units of the fund, typically, and in PMS they are holders of the individual securities. So yeah, I mean that's about it. Yes, yes, sir. Next.
Appreciating rupee is a risk for global investment. If yes, how do we mitigate it?
Yes, so absolutely right as far as the first point goes. Appreciating rupee is indeed a risk for global investment. Number one, we are not mitigating that risk. I did mention to you that currency is an asset class that we don't control. And right now, we really don't have products, or we are not looking at really mitigating the rupee risk. The next year, actually, I can see strengthening of the Indian rupee, because rate cuts are expected in the US. The US Federal Reserve is expected to, be more dovish, and they are expected to do those rate cuts. If rate cuts in India are much sharper than the US, then again we can see the rupee only depreciating further. But yes, there is definitely, if the rupee is indeed appreciating, it is a risk, slight risk to the global investment. Our entire idea is to really generate returns, or at least capture those pockets of opportunities where, even accounting for, let's say, the risk of rupee appreciation, the investors should be sitting on decent returns. So that has been our endeavor. Yeah, I
Yeah.
mean, I hope that answers.
Next question is from Indrajit. He's asking, despite statistics shown by you of superior returns in rupee terms by Nasdaq, the long-term returns of by popular AMC fund of funds have lagged Nifty 50 yearly. Why is that?
Yeah,
I would like to answer that, and maybe you can fill in wherever I leave any gap.
yeah,
I think most of the global FOFs started only last 3 4 years, and last 2 3 years have been quite brutal for global markets. Nasdaq seems to have gone up on basis of only seven, fabulous seven, or what, fantastic seven, whatever it is called. I don't.
magnificent
Magnificent Seven,
seven.
yeah, Magnificent
Yeah,
Seven,
yeah,
like, because of this AI revolution which is happening, that is propelling all those seven big stocks, which is taking Nasdaq higher. But underneath, like most of the stocks, till about a month back, I think all the stocks were at like year to date zero returns were zero for those stocks. So that's why the fund FOF which I've invested on in non-bank stocks, the returns were looking quite poor at that time. So that is
right.
the reason why it could be looking for. But long-term returns, I think long-term only Nasdaq has been there, and Nasdaq returns are like phenomenal. I think last 20-year returns are to more than 20% rupee terms, if I'm not wrong. Nasdaq returns I'm talking about.
Yes, I mean, if you factor in for the depreciation, upwards of 15%, most likely. But yes, I completely agree with you that the fall. I mean, as I mentioned to you when I showed you this slide as well, a 33% correction in Nasdaq. Okay, 33.10% last year. This correction has the potential to quite literally wipe out a significant chunk of even a 5-year CAGR.
Right.
Normally, let's say a bad year here and there will not necessarily affect a winning streak of CAGR. But when you have an index where actually more than one third of its value has been lost in a single year, It quite literally shaves off significant value even when you look at a 5-year CAGR number. And to that extent, the markets in India were very, very resilient. In fact, last year, Nifty 50 did return positive, and hence the disparity was only exacerbated further. And that is the reason why we see that popular AMCs, the FOFs, global FOFs have actually lagged the Nifty 50. And again, this is after factoring in for the rupee depreciation also. So yeah, I mean, one possible or the most likely suspect has been, this 33% loss which investors faced last year.
Right. I think we have answered this question, but I'll just still read it out to you. Can you elaborate
Right.
how different is the tax structure? Is it more efficient than investing in Brazil fund or Japan fund through an Indian AMC? And via global PMS, do you invest only in US stocks anywhere you find an opportunity? I am referring to direct equity and not ETFs.
Sure. Let me break this down. So first is from a tax efficiency point of view, if you are looking at an Indian AMC investing into, let's say, Brazil or Japan, then of course the entire concept of the mutual fund, the specified mutual funds that came in. So any mutual fund which is less than 35% invested into Indian equities is subjected to the regular rate of taxation. As against that, if someone is investing for the long term in, let's say, a direct global ETF or a portfolio of global securities, not through an Indian AMC, tax structure wise, the long term capital gain tax is lower. So that's number one. From the global PMS, we are investing in US listed ETFs, but as I mentioned to you, US listed ETFs does not necessarily mean that the portfolio is only US focused. We are investing into region focused exposures as well outside of the US, but in the US markets only, because for us there is this one marketplace where we are quite literally sourcing all our exposures. So yes, we are, there are certain areas where we have found opportunity and captured it also, outside of the US. Currently in our portfolio, we are not doing direct equity investments. Our entire reason for choosing ETFs also, along with the other reasons that I mentioned, is the entire active versus passive debate that happens globally. If you especially look at the US market, you will find that over a longer period of time, more than 85 to 90% of the actively managed funds have underperformed the benchmark. And I am quoting the SPIVA report, which is released by S&P every half year, which is quite literally a scorecard, which talks about the performance of the, let's say, US funds visa. I mean, this report is released separately for India, separately for other regions also. So in the US, the trend that we've really seen is that more than 90% of actively managed funds have underperformed the benchmark. When we are looking at a portfolio comprised of ETFs, the idiosyncratic stock specific risk in the portfolio gets completely, or rather, let's say it gets mitigated to a very great extent, if not completely eliminated. One or two companies going bad in the portfolio will not necessarily drag the returns of the entire portfolio down until and unless it is really taking down an entire sector along with it. So that is also some of the considerations. Yeah, I mean this is our entire rationale behind having strategies comprised of ETFs.
Right. And somebody wants to understand the three good themes that you're betting on.
Correct. So one is of course semiconductors. I would really consider semiconductors as a phoenix rising from the ashes. As poetic or philosophical as it sounds. Reason for that is that in the year 2022, semiconductors was the worst performing investment theme. We chose to invest in it nonetheless. So for most of our clients, we actually captured it at lower valuations. Again, a contrarian play, as you mentioned. But because we are looking at, and our entire consideration was simply beyond the entire chip shortages, because chip shortages could be for a year or two from now. But we are really envisaging an interconnected world. Okay, just yesterday I was revisiting a report that read that in the year 25-26, more than 75 billion interconnected devices will be there globally. The kind of
Oh,
chips that would be required, the kind of advanced chip manufacturing that is required, itself opens up a huge opportunity. In fact, major demand for chips is expected to come from electric vehicles.
mm-hmm.
So by 2030, again, the picture would be completely different. So that is one theme.
Right.
The second theme that we are looking at is perhaps cloud computing. A lot of cloud-based solutions with so much data processing that is happening, that it is physical infrastructure really has its limits. It is said that the entire concept of data doubling is happening. I mean, data doubling, the outcome of data doubling is that whatever data that we have currently, okay, across the globe since the start of human civilization, if I may add this, uh, in this data, more than 90% of the data is said to have been generated only in the last 5 years. So we are talking about 3,000, 4,000 years of data. Okay, be it wall carvings, be it some of these relics, artifacts, to introduction of printing press, archival records, and all those things. So if all of this is considered to be data, more than 90% of it has been generated in less than last 5 years only. So, that is tremendous. That is the rate at which data is growing. Data doubling typically means the time it takes for data to double from its current volume. And that entire data doubling time itself is reducing over a period of time. So physical infrastructure really has a lot of its limitations. And to that extent, cloud-based solutions are something which are very much in demand. In fact, a testimony to the fact is that areas like, let's say, or other companies like Microsoft, Google, Amazon, and especially Microsoft, they have been consistently, or even Amazon, they have been consistently reporting a rise in their cloud computing revenues. You have AWS and some of these other
Right, right,
services.
yeah, yeah.
So that is, something which is happening. A third theme which we possibly could look at, again, it could be artificial intelligence is one of the themes that we are observing very keenly, more so now because of the way the rate environment seems to have stabilized. Why artificial intelligence? Again, if I really have to share some data, last year, for Q3 2022 or Q2, so the second quarter of 2022, I'm sorry, the top companies in the US mentioned artificial intelligence in their earnings calls collectively 40 times. But fast forward to 2023, in Q2, if you really analyze the earnings call transcripts, so we would find that artificial intelligence was mentioned more than 200 times. And
Mm-hmm.
this is where we say that artificial intelligence indeed has the potential to achieve huge efficiencies in manufacturing, in employee productivity. But these efficiencies will also flow to those companies which are the early adopters of these technologies. So,
Mm-hmm.
all those companies which, are either providing those services or are early adopters of artificial intelligence. We are very bullish on such companies for the decade.
Okay. So two more questions. Kunal wants to understand, is there any insurance on these investments? What is the last resort? In case of a mutual fund, we have a trustee who ensures safety of my units. In case of
Correct.
direct equities in India, there is CDSL and STL who hold my shares, and I don't have to bother if a broker goes down. So how does it work here?
Correct. Very relevant question. So I would say that that yes, you are right that unlike an Indian market where we have demat accounts and with the name of the individual PAN cards, we don't have the concept of demat account in the global market. Across the globe, we manage segregated accounts, which typically means that the shares are actually held by your broker, and then they are demarcated, according to the different accounts that are opened. Currently, our broker is Phillip Singapore, and Phillip Singapore is monitored or very heavily regulated by the Monetary Authority of Singapore. The implication of this is that there are very stringent laws when it comes to the segregation of assets. The liabilities of one particular account cannot be segregated, cannot be set off against the assets of some other account. Even if a broker is going down, the regulations of the Monetary Authority of Singapore, mandate that the investor portfolios or the investor securities will not be used to set up the liabilities of the broker. A slightly unrelated example very recently could be that of Credit Suisse. With all the problems that happened in Credit Suisse about a few months back, the Monetary Authority of Singapore came out with a statement which said that all the Singapore accounts of Credit Suisse, they are protected, and that is the way in which investor protection is very very stringently enforced by the Monetary Authority of Singapore. That itself can be considered as your insurance. There is no formal insurance here, but this is how the stringent nature of the Monetary Authority of Singapore is ensuring that investors are indeed protected in such an event.
Okay. There's someone who wants to understand, can NRIs invest in inbound AIFs to invest in Indian equities from GIFT City to benefit? I think this question, I don't know how relevant it is.
No, I will still answer it. Of course, not relevant to the content of the webinar that we just had. But definitely. So there are the entire concept of seamless investing is being very very heavily enforced by the GIFT City regulators. In fact, very recently there was also let's say an announcement which says that foreign investors are not required to open any PAN card, or they are not required to have any PAN card in GIFT City. For NRI investors, typically what happens is that because GIFT City is an offshore jurisdiction, their point of contact is, or their interface is with an offshore entity. Their interface is not with an Indian entity, and because of this, what happens is that they are not required to open any bank account here, which otherwise they could be required to open under the PIS route. We know the kind of operational challenges investors could face if they are opening bank accounts here in India. But because this is an inbound AIF, and because you are not required to open your own bank account in GIFT City, you will directly remit funds to the collection account. This itself is the single most reason why there is ease of entry, as well as even the repatriation will be the exact opposite of the process. You will be receiving your funds back from an offshore entity, and that is something that will happen.
Right. Last question. I think somebody wants to understand your thoughts on nuclear and uranium investing. I think you already mentioned that you are bullish on this.
Yes. So yeah, I mean, so nuclear is one of the themes that has done very well. My take on this entire thing, and in fact, slightly, I will also reference this to an article on ESG, which I had written for the CFA Society, a few months back. First is, and right now as we speak, the climate change summit, the very recent one, just got concluded. The global nations, the way we really look at it, are very much divided as to the phasing out of fossil fuels, because the developed nations want to enforce a phasing out of fossil fuels, but a lot of developed nations require fossil fuels if they really want to unlock let's say the opportunities which natural resources enable for them, maybe regions like Africa, even India and China. Okay, so yes, we are again, India is a very good destination for sustainable investments as well. But we really cannot rule out the fact that fossil fuel adoption will continue, at least in the developing part of the world. But if at all, there are global, let's say, if there are very very stringent measures globally as to complete phase out of fossil fuels, no matter what, then one energy source which can actually ensure a consistent supply of energy, and which is more on the cleaner side, is uranium. Uranium is classified as a clean energy. It is not necessarily a green energy. In fact, a few months ago, I had written a newsletter on clean energy also, where we had drawn distinctions between renewable, green, and clean energy. So uranium is classified as clean energy. It is not classified as green energy. And uranium, even scientifically, it is believed. Again, I'm not an expert in uranium, but still, it is believed that it is one of the single most sources of energy which is actually giving you a very high level of output for every unit of input. What has also happened is that traditional clean energy businesses like solar and wind, so they have had their own challenges. Let's say in 2021 in the Nordic regions, the wind patterns were very, very erratic, because of which there were a lot of disruptions in wind energy. Similarly, something like solar energy is quite infrastructure heavy. New projects really require significant investment. And in a rising interest rate environment, actually, the solar and wind energy have, kind of suffered because, of those kind of challenges that come with a higher interest rate. So for these kind of reasons, we believe that uranium could be a sweet spot. In fact, in the last year also, there is this one entity, Sprott, which actually purchased huge quantities of uranium, and there are attempts for having a better price discovery in the uranium market. So those are, some of the considerations which we are looking at. Uranium actually continues to be at its historic low, almost close to 75 to 80% discount to its highs in, let's say, 2011 and 2013. There was a nuclear disaster in Japan, after which confidence in uranium
Right.
as a source of energy dwindled significantly. But now we can see that, some of this confidence is coming back, and, that is the bet that we have for the long term.
Okay, great.
Hope this answers your question.
ठीक है. Thank you so much, Mihir, for the insightful session that you conducted. Gave us an idea about a new, very different kind of an investment approach that we can take in our clients' portfolios. Thank you, participants. Thank you for all your queries. Anybody who's interested in investing in these, you can get in touch with me. If you have any queries that you want to clarify, that also you can get in touch with me. We can get it sorted on one-to-one basis. Thank you, everyone. Bye. Good afternoon.
Thank you so much, everyone. Once again, thank you, Sandeep, for the wonderful opportunity. And yeah, happy weekend to everyone.
Happy weekend.
Thanks.
Yeah.
Thank you, Sandeep ji. Thank you, Mihir.
Yes.
Thank you.